Hey there, everyone. It's Blair here at Time Trades. Welcome back. I took a week off of last weekend's video, holiday weekend and everything. So I wanted to get this one out because I'm seeing a lot of setups emerging for next week. So I wanted to get this one out a little bit early during this holiday week so that everyone has a chance to kind of digest what is going on and maybe position themselves for next week. So let's start with the indexes as usual. I'm showing a QQQ here on time trades. What immediately jumps out is a very high probability of a pivot high, 69% on January 3rd. And after that, there's a few kind of medium to low probability down days, including some 2 standard deviation down days here. And one of the things that I noticed that's happening from an astrological standpoint is we're going to have about a 1-week overlap of both Mercury and Venus being retrograde. And I was curious kind of how often that happens. And I look back over the 20-year history, and I can only find one example in the past of when that had happened before, and that was June of 2020 when there was about a 1-week overlap of those 2 events happening. So that's going to happen again from June 14th through to June 25th. And you can see that here. You can just kind of turn on the wheel of 24 settings for Mercury and Venus, and you can see that both are moving down during that time frame. So starting from the 14th down to about the 25th or so, that's when both will be moving retrograde. So things are indeed looking bearish, and this is confirmed when we look across the other indexes. Let's take a look at spiders. We have small probability pivot highs here at about the same time as the Qs, and a strong probability of a pivot low late January with some low probability 2 standard deviation down days right around January 19th and 20th. Okay, so that is generally aligned with the bearish outlook. Look at the diamonds. Diamonds as well have some 2 standard deviation down days in late January and a 45% pivot low February 3rd. Let's take a look at IWM. IWM is showing again a big pivot low January 28th, and we've got a big down day January 24th heading into that. So the pattern is emerging here. Time Trades does not believe that there's going to be a strong start to the year this year. It looks like the forecasts are all kind of lining up to support the premise of a correction in January. We can also take a look at VXX to see if that is confirming this premise, and it is. So we see some big increases in volatility starting mid-January, as well as January 25th, with a few down days in between here. If we look at up here on January 14th and January 20th, there's a few probabilities of down days in volatility. So the overall picture for January is stock prices down across the board, as well as volatility up. One of the things that I noticed when I go and take a look at models, and I do this almost every day, I go to the models tab and I click on the activity rating because I want to see, what has the most probability of having some sort of activity in the next few days. What jumped out at me is, we've got Wells Fargo up here, big US bank. Scroll down a little bit. You can also see Citigroup, another huge global bank, Visa. So there looks like there's some relatively significant activity happening in the financial area. And if we click on one of them, like Citigroup here, again, it's supporting the bearish thesis for January. Okay, Wells Fargo is the same thing. Visa's the same thing. So we can look at WFC, and these are all roughly the same dates as well. Okay, so that's I always look for that kind of alignment within time trades. Do we have alignment across the board? And in general, we do. I mean, there's differences of 1 or 2 days here and there, but there's no stocks that are like super bullish in January that I can find here. Okay, so that's the outlook for the banks. We can also take a look at XLF, the financial subsector within the S&Ps, to sort of see if that's aligned, and it is as well. Okay, so let's go and take a look at Tesla. I wanted to show an example of a stock where we are using timing signals other than the probabilities to make some good trades. So here's Tesla. In our last video about 10 days ago, we were right down about here, and I mentioned this has a pretty good bullish setup. So let's review why I said that about 10 days ago. We can turn on Gann waves here. And I also want to turn on the Gann date square of 9, because that was a big reason for the bullish call that I made. So we're going to lock this 0-degree line here on this major high in early November, and we're going to see what happens here. Okay, so back on December 19th, that was a Sunday, that was the day before this red candle here. I mentioned in the video that Tesla looks bullish. Part of the reason was there was some move up, 1 standard deviation forecasts in the next few days. But another big reason for that call was the yellow Gann waves, which tend to be supportive for Tesla. You almost always see price go up, especially in the early part of the yellow Gann waves. And the third reason for that call was this Gann date square of 9. When you lock the 0-degree angle on a major pivot, then what is being displayed here are basically 90-degree intervals on the square of 9. Okay, so it's using the square of 9 to convert time into price, right? So this is the anchor date, November 4th. And then at 90-degree intervals from that anchor date, we are converting time into price using the square of 9, and then displaying those prices on the chart with the blue dotted lines. Okay, and I noticed that price was right here, right above one of the blue dotted lines at 9:10, and that was about $200 ago. So price surged up to 1110 and a little bit over, and now it's encountering some resistance. So this is probably a little bearish in and of itself, but also if you look at the timing, what happened the last time that we were in a black period before blue? Okay, we went down in December. Black period before blue was November 4th at the all-time high, and not much happened here in October, but we got a little bit of a down day back here in September. So the timing is aligned as well. And if we go over to TradingView and take a look at the time trades indicator here. So we've got the time trades indicator on, as well as a bunch of VWAPs. Now, what I like about this indicator, this one indicator draws the green boxes, the purple boxes, as well as these light gray lines here. And you can see the light gray lines are drawn in the future. These are based off of natural cycles. There's no fancy machine learning or anything happening. But it's kind of eerie how these tend to line up with local pivots, these gray lines here. Okay, and we just encountered another gray line and prices down below that. This could very well turn out to be another pivot. Okay, so even though there's very little in terms of actual price forecast on Tesla, the other, I guess, non-forecast related timing elements are looking relatively bearish right now for Tesla. So if it starts to lose some of these VWAPs here, you can see the oldest VWAP I've got colored in cyan. If it starts to lose some of these VWAPs, it may be worth an entry on the downside. Okay, so I wanted to share that example of how to use time trades when there's very little forecast on the downside. I mean, these forecasts up here are like, 17% probability, another 17% probability. They're not very high probability moves down. So that alone would not be enough to take a trade. But the other items that I just talked about are adding up to enough to consider at least a bearish trade on Tesla. Okay, so we want to wrap things up with a view of crypto. Let's take a look at Bitcoin. And Bitcoin has had a very clear and very bearish forecast for early January for about the last couple of weeks. So I would definitely be very defensive coming into this. This is a big cluster of almost unanimously bearish moves. We've got two pivot highs surrounded by some 2 standard deviation moves down. Now, the thing about 2 standard deviation moves down is they're very rare, and and because of that, they tend to be much more accurate than 1 standard deviation moves down. So this is a high confidence forecast from time trades. And it's a very big cluster. I also look for clusters of moves down like this. So heading into the new year, starting with January 1st and then January 9th, I'm looking for some basically a top in crypto that could last until March, right? So we see almost complete down pressure until this pivot low in March, when it looks like there's a chance to turn things around. All right, so be very defensive on crypto. Look for some moves down. If you're a two-way trader, there's some good short opportunities in here. If you're an options trader, maybe take a look at some crypto miners on the downside, Mara, Riot, Hut, those names. There's some good opportunity here coming into the new year on the downside. All right. So that's it for me. Thanks for listening. Thanks for using time trades, and good luck and good trading. Bye now.